focused viewers and get into conversation with Narendra Solanki, Head of Fundamental Research Investment Services at Anand, Rathi Shares and Stock Brokers. Narendra, hi, good afternoon and thanks for your time. Fundamentally, talk to us about how one should be reading the market right now. The markets are absolutely on a downward spiral. Is there any net of safety or any safe spot that you're seeing in the market right now, or do you believe that it's time to just wait and watch?
Good afternoon. See, considering today's markets, I think today almost all the indices, be it sectoral or be it strategy related indices, almost all everything is in red. However, what we can infer is that market is being overwhelmed by the global geopolitical situations, which is right now in a very flux or fluid kind of state where it is becoming very difficult for people to analyze what is actually going to take place in a week or so down the line, and what kind of risk the investors are looking ahead, both in terms of risk to the global economic growth, plus the risks to the supply chains and the overall global trade. That has been lingering on, and I think there's no respite which is likely to be seen as far as next quarter or so is concerned, looking at overall things. However, the silver lining for the India is that in a fortnight or so, the EU trade deal is going to be announced. So that could also bring out some kind of a relief in terms of economic tie-ups. So that is a silver lining. And as far as US trade deal is concerned, I think the markets have factored in that might not be coming out very soon, at least not before the budget. So right now, markets are focusing along with the global risk, the markets are also focusing on results. So far, although we are very early into the season, but the results momentum is not up to the mark as what was the expectation before the results, especially the one-offs on the profitability front, which companies have taken hit due to gratuity and kind of expenses. So that has actually damped the momentum of the earnings recovery, and the markets are now actually reevaluating whether the earning momentum, which was going to happen in H2, has shifted one more quarter or not. Although I think auto sector still has not come out with the results. So looking at the monthly sales numbers, we are very optimistic on the sector, and earnings should be very strong going ahead. So I think some respite or some optimism can be seen 2-3 days down the line when we see the results from auto companies coming out and some other companies coming out. So I think definitely the global tensions and global risks have overpowered the domestic sentiments. And right now, I think it's better to wait and watch rather than taking any knee-jerk reaction for now.
Narendra, anything that you're finding interesting in a market like this? Is it a good time to start nibbling on to names, and what are the kinds of names you will look at? We're obviously seeing pressure across the board. It's not any individual index or stock where we're seeing pressure. So what would those names be in terms of what you would nibble onto?
Yeah, definitely. As in my initial remarks, I told that auto industry is looking good and it is also slated to post good numbers. So I think a few names, especially in two-wheelers like TVS Motors, Motor Corp can be taken up. In passenger vehicles, via Mahindra and Mahindra, you can look at it. So these are the stocks in auto sector. In ancillaries, I think Minda Corp kind of stocks you can start accumulating. Plus, in healthcare space, there are a few hospitals stock where you can also build positions because there are a lot of capacities coming up online, and the operational leverage gets to kick in next 2 to 3 quarters. So I think these are the two spaces I think you can start looking at, and they should also post good numbers as far as results are concerned.
Okay, Narendra, just getting a little specific here, talk to us about your take on some of the quick commerce aggregators, some platform companies. Basically, this entire new age tech theme that we're seeing in the market right now, Eternal is deep under pressure, 4.5% cut ahead of its earnings tomorrow. Talk to us about your outlook here.
Yeah, we are overall positive on the space, especially if Eternal, if you look at it, we are mainly looking out how the Blinkit performance comes up tomorrow. And we believe that operationally, the execution momentum should be maintained, and we should see similar kind of improvement as we have seen in the previous quarter. So the momentum in execution, especially in Blinkit, should be maintained, and might we might also see some improvement from over there. And as I think company is well set to achieve its target of achieving net positive EBITDA in this year itself, in Q4. I think with that momentum continuing is broadly what we expect, and do not see any surprises from that front. However, definitely would like to see how the management comments in terms of increasing competitions and the kind of ramp up in dark stores which we have seen the other competitors have been doing. So, what's their strategy regarding that, etc.?
Uh, where do you think we are where the realty cycle is concerned, and good time to buy? If you were to buy, what are the names that you're looking at?
I think the sector is facing, see, if you look at the overall demand scenario of the realty sector, so there are two aspects to it. One is consumer demand and one is investment demand. Now, the consumer demand is also facing some kind of a headwinds in terms of in services sector like IT, we have seen the layoffs happening. So there is some dent from that space, especially in big cities wherein the IT services has a major share in terms of real estate demand. And the second aspect is the investment demand. So the kind of run up we have seen in bullion market, especially gold and silver. So I think a lot of interest has been shifting in much more liquid and performing asset class, which in comparison with real estate. So I think the investment demand is also taking a hit from that perspective. So from both of these point of views, I think the sector should be in a consolidation mode for next 1 or 2 quarters, and I think one can wait till at least either of the situation demand scenarios show some kind of a green shoots.
Investment in securities market are subject to market risk. Read all the disclaimer documents carefully. The above data is from our research report coverage.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.